Hi, it's Paul Antonelli here with the next episode of the Ideal Business Podcast. What I wanted to do today was to talk about something that's super important for all businesses, every single business, and it's the one thing that causes most businesses to fail, and for business owners the largest amount of stress, and that's cash flow. So I've worked with many clients over the years, and one of the first things that I do is I end up looking very closely at how they manage their finances when I initially start working for them, and how to and if there's a system, do they have a system in place? And more often than not, there's not really much of a system in place to manage cash flow. Cash flow is a tricky thing or a system because it's unpredictable. Lots of things can come out of left field. And that's actually the reason why it's really, really important to have a system for managing cash flow that gives you control and gives you confidence and gives you certainty about your cash at any point in time. So there's a lot to this subject when you start getting into it, but today I'm going to share with you how I've got a particular system and a process of managing cash in all my businesses, and I'm going to cover one particular aspect today, which is all about how to manage the cash and some of the key processes and things to implement in your business. You know, if you're not happy with your cash situation or your cash management situation, and you're always sort of stressing about, the bills coming in, am I able to pay those bills? Uncertainty as to the level of cash, the predictability in the next month where your cash position is going to be. If that's an issue for you, then I would really encourage you to look at implementing a bit of a system to take control of that. And I'm going to go through that today and give you a little bit of an understanding for a system that works for me. One of my policies in my businesses is that I want to have enough cash to run my business for 12 months with little or no revenue. It's fairly conservative, I understand that, but it is, having gone through bankruptcy before and being in that situation where you do lose control because of the cash situation. It was really important to me that I was never going to be in that situation again. So in my businesses, I've built up substantial reserves now. It's just how I operate. And so it gives you the ability during these times, like for example, we're in the middle of the pandemic at the moment, the ability to take a breath, take some time to adapt, to work out which direction you need to change. You've got resources to apply to things. So building up a reserve of cash is actually really, really important. First thing I'm sort of going to talk about, I guess that's really the system that we use it's called financial stability. So the idea behind it is to create financial stability, just take all the stress out of it. And I'm going to share with you some key ideas around the system and how it works. The first thing to consider is, if you want to have a sustainable business, and sustainable means it can operate and run efficiently and effectively and profitably into the future, then your cash system needs you to put money aside or have money for the future. So think about it like this. There's 3 tenses of time. There's the past, the present, and the future. So with regards to managing cash, if you want to have stability, it's essential that you're allocating and setting aside money for those 3 tenses of time. Now, if you look at the past, what falls into that category? In the past, it's things like debts, loans, past bills that you've accrued, suppliers, you might have credit cards that you're using. They're all money spent in some fashion, and that's called the past. So typically that does get the money that it needs because if it doesn't, you get people ring you up and you get stress from creditors and suppliers and stuff. So there's not a lot of planning around that you need to think about allocating that, but it does happen. But that's the past, right? So that's actually money that's already spent in essence, and it was cash that you didn't have. It's been spent, whether it's in some form of credit. Okay, so that's the past. The present is money that gets spent now, today, when it comes in. And they could relate to things like staff costs, rental stuff, operating expenses, just everyday costs in running a business. So they're present costs. And then, of course, you've got future costs, future expenses, operating expenses. So these are things that typically get left behind in this process of cash. So tax, sales tax or GST. There's a lot of businesses that when I work with, the GST, the goods and services tax, or the sales tax, it's not really our money, and so that money ends up getting used within the business, and then it creates a hole for that in the future. So marketing, promotion, that's all for future improvements to your business, development of systems, improvements, and then there's unexpected costs which happen. Something pops up, something breaks, there's an issue, there might be a legal case, and cash for expansion. Now, if you think about those categories, they're for future. So that's actually allocating money for the future. And so, as I was saying before, it's important in managing your cash that you've actually got money set aside, and money flows actually into handling the past, the present, and the future. And the future is the one where there doesn't ever seem to be enough left. Yeah. The other one's just the past gets handled, the present, sometimes things get pushed around a bit, but the future, it's rare. And then you end up creating a little bit of a backlog, or you don't have enough juice, you don't have enough fuel to actually drive and grow your business effectively. So that the challenge, I guess, in any cash management system is the tension between those three tenses of time, the past, present, and the future. And so that inevitably, it just creates, as a business owner, potential lack of control and stress around it, So to take into account and to effectively manage cash in your business and have full confidence about your cash position, it's essential that money is allocated in those three zones. So that's the first concept to understand. The other thing about cash is it doesn't like to be static. Cash likes to move. Cash likes to flow, cash flow. And so when you build a bit of a cash management system, you sort of almost have got to trick the money into believing that it's moved, it's gone, it's flowed, almost like it's been spent. And so the system that we've developed and we work with, been using this for over a decade effectively, and it's been an anchor and a foundation point for all my businesses, which has enabled us to operate profitably and expand and grow and do all the things that we need to, and ride out any of these ups and downs in the business cycles. So when you receive some money, I'm just going to understand. We receive, let's say we get $100 in a business, $1,000. Let's pick $1,000. We get $1,000 into the business. It's not $1,000. It's actually made up of a range of components. So that $1,000, that's the challenge when you manage cash, because when it comes in, you just think it's $1,000. So what should I do with this money? And typically, whatever's making the most noise or wherever the most needs are, that's where that money goes. But actually, it's a rule that if you don't take into account the fact that money is as it comes in, it's actually got different components to it. It's not actually just to be used in one space. So what do I mean by that? For example, so when you get this $1,000 into your business, a little bit of that money might be for sales tax or GST, if you've got that. A little bit of that money is for tax. You're going to have to pay tax. Most of us operate businesses. You generate profits, you're going to have to pay tax. There was money that you spent to generate that revenue directly. So they're like cost of sales, cost of goods. There might be materials, or there might be direct costs from staff or suppliers. And then staff costs are a big one. And then your operating expenses. So when you think about it, the way to sort of think the idea through is that $1,000 that comes in is actually broken down. There's little components of each of these amounts within the $1,000. So by understanding that, and by actually making sure that those little components are allocated or actually go into those components, into those boxes, then you've got a better way of controlling the cash. And it's sort of something that needs to be very rigidly managed. And so the way that we run the system, for example, I'm going to give you some information around the type of the form and the flow of allocations and how that works. I just wanted to say something, though, that when I started doing this process over a decade ago, when I sort of looked at putting money aside for the future as well into those allocations, I found that I didn't actually have enough revenue. And I went, this doesn't really work. It just doesn't work. Like, I can't allocate money for future, for promotion, for this, for that. That in itself was really valuable, because what happens is if you've got revenue coming into your business, enough cash flow, and you can handle the past and you're dealing with the present, you've got a little bit of money set aside, then you think it's okay. You say, well, that's fine. I'm actually pretty good. But actually, if you don't have sufficient money for future, you can be very vulnerable. Your business can be very vulnerable. If something goes wrong, you could be out of business very quickly, 6 weeks, 8 weeks. And so the first awareness or the aha moment I had when I was implementing this is I simply didn't have enough money coming in order to do what we would call fully allocate, to be sustainable, to build a sustainable business model. So that was in itself was valuable. It was a bit painful because I couldn't actually do what I wanted to do. I couldn't push the money around and the cash as I wanted to do. But it gave me that awareness that I actually needed to increase my revenue. And that's important in itself, because if you understand that in order to build a sustainable business into the future, you need to have money set for the future, then that's a change of thinking that can really enable you to reframe what you need and how much revenue you need to generate in your business. So the first sort of process around this is we call it allocations, and the way this works is it happens every week. So and I've worked with a range of different businesses that have different forms of cash flow. It comes in lumps, sometimes it comes every day. And you might need to adapt this a little bit depending on how it works in your business. But the first rule of managing cash is you manage it weekly. This is really important. It gets managed weekly. You can't manage cash on a monthly basis. It's too far. And when I talk about managing cash, it's not just a theoretical concept. It's actually moving cash around on a weekly basis. So in my businesses, the week cycle, all our cycles for week are Friday to Thursday, Friday to Thursday, Friday to Thursday. That's a week cycle. And we use that for reporting, for statistics, for managing cash. And the reason we do that is that it closes on a Thursday. We can have team members put together some data, some information, update stats on a Friday, and we can do a bit of review and do what we need to do on Monday. So that Friday to Thursday is a really good time frame we find for an operational point of view for managing a business, and particularly with cash. So as I said before, because money likes to move around, you've got to trick it into moving. You've got to actually trick the money into moving around. And the way the system works is on a weekly basis, you put money. The first thing is don't touch the money during the week. So any cash that comes in from Friday to Thursday, and this isn't about invoices and it's not about invoices and the work that you've done. It's purely about the cash that flows into your business. So it is a cash flow management system. It's purely about the cash that moves into your business. And the way this system works is on a weekly basis, same time every week, I've been doing this for over a decade. On a Monday, I run the allocation system. I call it the allocation system. The next episode, I'll go into a bit more detail about it, but I just want to give you the idea of the concept of it in this episode so you'll understand that. So the way it works is typically you can't touch any money during that week. So the cash that comes in for that period from the Friday to Thursday, you can't touch it. You just don't touch that cash. You leave it alone, okay, in your bank account. And it is important in the system that we have is that you have a different separate account for where you pay money out, where cash flow goes out, where money comes in. So I have this income account, money goes in there. So the first thing is you can't touch it during the week. It's very hard to allocate it if you've already started spending it, if that makes sense. The next thing that you do is we set up bank accounts. For anything that you want to allocate money to, you set up bank accounts. Yeah. And they are, and people go, oh, it's really complicated. Your accountant will probably say, why do you have all these bank accounts? It's actually pretty simple. The only operational accounts that you need to interface with are two of these accounts, and I'll explain what they are. All the other accounts where I allocate cash into are actually online accounts. There's no fees associated with them. And you can only move money in and out of those accounts to your own accounts, if that makes sense. They're pretty standard. It's been around for ages. So just recapping the process, it's sort of essential that you're handling when your cash comes in. You've got a system to manage cash. It's important that you're setting money aside, dealing with the past, the present, and the future, which is really important. It has to be done on a weekly cycle. If you go out beyond that, it's very difficult. And money the cash has to go into the box for what it's representing, rather than keeping it all in one spot, and then you could journalize it. People say, oh, I notated some of that for this, but it's not the same thing. The money likes to flow, so it should actually go into the relevant spot, the relevant bank account. And so this process, in the next episode, I'll talk a little bit more about the actual structure of this and how it works. But what I wanted to share during this episode is the importance of a cash management system and having actually a system that gives you control, and it gives you incredible insights into where your business is at. I've been running this system, as I said, for over a decade. I know exactly every Monday the allocation systems, and there's a spreadsheet I've been running for years around this process. I know exactly how my business performed in the last week, no question. It's very clear. I know exactly where I'm sitting. I know, and it ends up. It is a good place to be as a business owner. You eliminate one of the things that you have a lot of attention on and stress on. And so it's very valuable. And most business owners I've talked to, they've said if there's nothing else that I implement or I utilize from the things that we've worked with them on, they said that's been a game changer for them. So it is really powerful if you do implement it. So in the next episode, I'm going to go into a little bit more detail about how to set this up and how to make it work for you and take away any stress relating to cash flow. So thanks for listening, and look forward to catching you in the next episode. Ciao for now.